When I was growing up, I used to love going to theme parks. I loved riding the crazy roller coasters, the ones that would take you up on the highest highs and then drop you off a cliff. My nerves would be building up as we would slowly climb the steep ascent to the top, and then the roller coaster would always seem to just pause right there and give you an opportunity to contemplate the pending fall on the other side. And I remember as the roller coaster would fall down on the other side, I would yell, I would scream, sometimes I put my hands up, but I loved doing it. Now, my friends, I don't love roller coasters quite as much as I did as a kid, now that I'm an adult. But right now, we are on a roller coaster of a ride, especially if you're playing the crypto game. But I want you to consider this. The roller coaster ride does not actually have to be a roller coaster ride if you understand what crypto is and how to integrate it as part of a indestructible, undeniable financial portfolio. Because here's the reality. Most people are buying high, they're panic selling, and then they're repeating that cycle. They're chasing hype, chasing FOMO into the market, and they call it investing. But the real reality of this is they're not actually investing, they're just trading. And here's the problem. If you're playing the crypto game and trying to time the market, trading, it actually is another job. It requires constant attention, deep technical knowledge if you're going to get it right, and worst of all, it's taxed like ordinary income, or at the very best, short-term capital gain, meaning it gets some of the very worst tax treatment possible. As President Trump has come back into office, we can see that crypto is back in the headlines in a bigger way than it's ever been before. Prices are soaring, new projects are launching, and the President of the United States, he's talking about buying up all the crypto in the entire world. Institutions themselves are following suit and they're buying in. Big companies like BlackRock, they're now starting to allocate a portion of their investors' portfolio into holding cryptocurrency to build wealth. But here's the reality, my friends. Before you get caught up in the hype, you need to understand this. The people who win in crypto, they're not the one flipping coins for a quick buck. The real winners, they understand the difference between trading and investing. They know how to play the long-term game to protect their profits and build, like I said, untouchable wealth. So today in this video, I'm going to break down exactly what's happening in the crypto market. I'm going to help you understand the difference between trading and investing, and I'm going to show you how to position yourself to actually win, not just ride the hype. So if you're new here to this channel, I want to welcome you to the Wealth Outside of Wall Street YouTube channel. My name is Ryan D. Lee, and my mission is super simple. It's to help you take control over your money and to eliminate financial uncertainty. Ultimately, all of what we do is to help you achieve financial freedom in 10 years or less, and we do it using a very sophisticated technical investing system that we call the passive income machine. It's a strategy that builds untouchable wealth outside of traditional financial strategies. So if you're serious about making your money work for you, hit that like button, subscribe, and share this video with a friend, because friends don't let friends ride the crypto roller coaster and have fun on the upside and puke on the downside. So right now, it seems like just about everyone is talking about crypto. It kind of reminds me of the hype leading up to 2008 when your cab driver started giving you investment tips on how to buy real estate with nothing down. Right now, everyone is talking about crypto. The market is up. Institutions, like I said, are buying in. There's talk of ETFs, regulations, and Bitcoin becoming a digital reserve asset. But what no one is talking about is the difference between trading cryptocurrency and investing in cryptocurrency. Here's what I want you to consider. Trading is a form of income. It requires constant research, technical analysis, and ultimately, if you're going to win in trading, you have to be able to time the market. It works as long as there is a buyer willing to pay more than you did. The moment sentiment shifts, the market corrects, and traders are left holding the bag, they lose. The only way you win as a trader if there's a dummy behind you willing to pay more than you paid for it, whether that was 2 hours ago or 2 weeks ago. Now, don't get me wrong. There's nothing inherently wrong with trading, even though I don't love it because it drives up and inflates the cost of things. But some people, they're pretty good at it. They make some serious money in a short period of time. But what you have to understand is this. Trading, it's not wealth. Trading is just another form of income. You could even call it a job. It requires time, effort, energy, skill, and when you stop trading, guess what happens? Your money, your income stops too. You are not wealthy, you are not free. Wealth is completely different. Wealth buys your time back. It gives you the freedom and the flexibility to have more options and more control over your life and time. Wealth means money is no longer the primary driver of the decisions that you make. It's a tool to empower you to make better decisions with your life. And wealth continues growing and producing for you even when you're not working. Traders ride high when the market is good, but when things turn, most are forced to move back to the next hustle. They might look rich, but they aren't actually wealthy. Real wealth is often the money that you can't see. Real investors, not traders, are focused on building wealth. Wealth is options, wealth is cash flow, and wealth is definitely tax advantages. It's about thinking in decades, not days. It's about owning real assets with real utility and holding and owning those assets over the long term to create real value, not just hyping up something with more trading. It's about safety of principal first and an adequate return in the form of interest, dividends, or rent. It's not making money overnight and then losing money the very next day. That is trading. And my friends, if you're just chasing the next cycle, if you're just waiting until the right time to buy in so you can sell out, here's the reality. You're speculating. And the reality of it is you could do the exact same thing without going to the market. There's a place called Las Vegas, and you can go and speculate anytime you want. But at the end of the day, do you really want to trade your hard-earned dollars and stake your future fortune, your future retirement on the idea of speculating? Now, I have to imagine that most of you watching this video right now, you're not speculators. At least you're not trying to be speculators. It's hard to not get caught up in the hype and the FOMO of cryptocurrency, and I do believe you should have cryptocurrency as part of your long-term financial plan. But again, if you're trying to speculate, you're just playing a fool's game. No doubt you will win some speculations, and no doubt you will lose some speculations, but it's a losing game in the long run for most people. So here's how cryptocurrency can actually make people rich. There's a reason the richest people are buying Bitcoin, not trading it. Entire countries are now even considering a digital reserve of crypto similar to Fort Knox with gold. Now, that could be a topic for another video, whether there's any gold in Fort Knox or not. Well, hopefully we find out soon. But the question is why? Why are these bigger companies playing differently than what is being portrayed on the market with all the hype of ins and outs of cryptocurrency traders? Because here's the reality. Long-term holders always win. Look at Bitcoin's historical returns. In 2017, there was a bull run. Bitcoin hit $20,000. Then guess what happened? It crashed, and everyone called it dead. But those who have eyes to see, those who understand economic systems and understand how value is actually created, then they just held on. They rode the up, but guess what? When it went down, they didn't panic and they didn't sell. In 2020, there was yet again another bull run. Bitcoin hit $64,000, and then guess what it did? Well, it crashed again, and most people again called it dead, getting out just as fast as they got in. Right now, we were previously back at all-time highs, and there's been yet again another crash, and institutions are jumping in like never before. The same people who held their Bitcoin for years are ignoring the hype. They're ignoring fear, and they're the ones that are building real wealth. Wealth is created with time. The more you can work with time instead of against time, the easier it is for you to create real wealth, buying real assets and letting those real assets do the work of time making you wealthy. Now, compare that to the people who try to trade every cycle, jumping in and out, trying to time the top and then selling at the bottom in a panic. Who do you think made more money? Who do you think in the long run built more wealth? Because here's the reality about traders. If they don't learn their lesson, they buy high, they sell low, then they sit on the sidelines licking their wounds for the next couple of years until they have the confidence to get back in and repeat the cycle all over again with the same asset or a different asset class that is being pumped up by media hype all over again. My friends, real wealth is quiet. Real wealth is long-term. And real wealth doesn't listen to the hype and the FOMO. So if you want to start building wealth in crypto, not just gamble, you need to follow these simple principles. Number one, buy with a long-term mindset. Crypto isn't about quick flips. If you're not thinking in years or decades, you're playing the wrong game. Data shows that over 85% of Bitcoin supply hasn't moved in over 6 months, with more than 70% not moving in over a year. Why? Because true wealth is built by owning appreciating assets, not just jumping in and out of the markets. The game is pretty simple. Speculators trade. They chase hype. They try to time the market. They usually lose to those with a plan. Investors, they hold. They accumulate assets. They ride out volatility, and they let time do the heavy lifting for them. The second step is understanding the difference between speculation and investing. Here's the reality. Speculation is hoping that prices go up. Investing is owning an asset with real value and letting time work for you instead of against you. Investing is about protecting your principal first and foremost and getting an adequate return in the form of interest, dividends, or rent. Think back to the last several decisions that you've made with your financial plan. Have you been speculating, parting with your capital, hoping for a future appreciation, or have you been investing, parting with capital with the safety of principal being your primary concern and an adequate return? Not trying to blow it out with hype in the short run, but an adequate return in the form of interest, dividends, or rent. My friends, most people today who call themselves investors are just glorified speculators. Most retirement plans are built on speculation, not investing. investing. And this is ultimately why the masses get Bitcoin wrong. Bitcoin is not a get-rich-quick scheme. It's digital property, a store of value, a shield against government control and inflation and financial uncertainty. To fully understand its role, you need to recognize the three types of money that exist in our economy today. Number one, there's gold. Now, Robert Kiyosaki calls gold God's money. It's scarce, it's durable, and it's a universal store of value. It's a natural resource that can be mutually agreed on across country lines, that it's an asset with value. The second form of currency is fiat. It's the government's money. It's easily printed, easily manipulated, and devalued over time because of government manipulation and control. The third is Bitcoin. And I think why Bitcoin is gaining so much popularity and becoming more and more mainstream is because it has the potential to be the people's money. It's a decentralized form of currency, limited in supply, and resilient to government control. While gold preserved wealth for thousands of years and still does today, and fiat destroyed purchasing power through inflation, Bitcoin is now the new alternative for a digital age. It's a financial escape hatch, a way to store and transfer wealth without government interference. This is why savvy investors are turning a portion of their portfolio into cryptocurrency. It's not a trade for quick profits. It's a buy and hold strategy as the ultimate store of value as the dollar continues to decline in value over time. The way I think about cryptocurrency is it's a hedge against the chaos or the uncertainty of the dollar. I think about cryptocurrency, Bitcoin specifically, the same way I might think about a food storage. I'm not buying in and out or trading in and out of my food storage. I'm owning my food storage, so when the next pandemic hits, I'm already prepared. I think of cryptocurrency the same way. It's protecting my empire, my wealth from the chaos of the dollar because everything today in the United States is denominated with dollars. So the third step in becoming an investor is protecting your profits and leverage wealth strategies. This is where most people fail. It's not just about buying and holding, it's about protecting and positioning your capital so you don't lose when the market conditions change. And this is why this channel is focused on teaching a concept called the passive income machine. It's how to turn crypto gains into real lasting wealth. It gives you the ability to move your money around in our economy today using a concept of leverage. My friends, leverage is the way to win in our economic game. Leverage is the key to capitalizing on market chaos today and still staying on track for long-term wealth. My friends, we use the passive income machine because it's a system grounded on protection, grounded on tax advantages, grounded on cash flow, and giving you the opportunity to use leverage throughout your system. We use assets like cryptocurrency to hedge the risk of the dollar, and we build a system designed to give us cash flow. Income that lasts our lifetime. My friends, if you like this video, here's what I'm gonna ask you to do. Number one, stop chasing the hype. Be disciplined, be still, be quiet, make profitable decisions, and let time work for you. Number two, take action. Listen, most people are just losing simply because of indecision. They're sitting on the sidelines waiting for things to calm down. I hope they calm down, but I don't have any anticipation of them calming down anytime soon. And in all the tumultuous chaos, guess what? There are real wealth building opportunities. So my friends, when you know a principle, when you understand an economic principle, take action on it, make a decision, and let that decision play out over time. And then number three, my friends, give me a like and subscribe, comment down below, let me know what your biggest insight on this video was, and share this with a friend. Friends don't let friends retire broke. So my friends, I'll see you on the next video.